Thanks for clicking! Toronto's Regional Real Estate Board has released Toronto's real estate data for the month of December, showing a major slowdown from the apparent momentum that was supposed to have characterized November. Or, as the media puts it, sales dip.
There's no stopping it.
Indeed, if you'll remember back when Toronto had the second worst November that it had seen in the past 11 Novembers, the media was quick to pump the FOMO, with the stage being set for a big 2025. Yet, as we'll see today, that momentum did not continue into December, with the media obviously struggling to find a positive note. A transitory year, a dip in December. As we'll see, it was not a dip. Sales increased in the second half of 2024. Obviously relevant information for those thinking about buying in January.
Irrefutable evidence.
But the, as we'll see, abnormal slowdown in December does raise a number of questions. If December was abnormally slow, if sales slowed down abnormally fast since November, then what happened the last time sales slowed down this fast since November in Toronto?
It might be unknowable.
So what I want to do today is go over Toronto's real estate data for the month of December, take a look at previous December slowdowns and how the following years played out after said slowdowns, and then discuss some implications. As we'll see today, the data is not showing a real sense of buyer urgency that had been predicted in November. Yet, it's also not showing that for sure the market will not take off in 2025. A lot remains uncertain, but we will continue to track Toronto's market on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, if you remember, that's the price of a home that represents the most popular set of features, and that was up very, very minorly in December. The benchmark in November was $1,061,700, and that bumped up $200 to $1,061,900 in December.
There's no stopping it.
So, the benchmark price is up about $200 since last month, down about $6,000 since this point in 2023. Back when we were told that Toronto was set to have one of the biggest price jumps of 2024, and realtors were prepping us for the great adjustment.
I thought we both understood I was lying.
And while the benchmark was up only about $200, the average price fell much more substantially. The average price in November was $1,106,000, and that fell almost $40,000 to $1,067,186 in December. So, the average price is down about $40,000 since last month, and down about $17,000 since 2023.
Again, I thought we both understood I was...
Fear not, though, according to the Toronto Star's account of a Royal LePage forecast, Royal LePage being a leading realty company, don't you know, the average price of a home in Toronto is set to hit $1.2 million by next year. They also said much the same thing last year, that it would be $1.2 million this year. But sure, leading realty company, sure. Journalism, sure.
I do think he likes us.
And the median price fell as well. The median price, that's where half as many homes sell over that price and half as many sell under that price. The median price in November was $945,000, and that dropped down to $930,000 in December. So the median down about $15,000 since last month, but still up about $22,000 since December of 2023. That was the great adjustment. Next up, the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for Toronto to completely run out of homes for sale. The MOI in November was 3.3, and that bumped a little bit to 3.4 in December. So that's a lot more inventory sitting on the market, the highest that Toronto has seen in December for the past 11 years, which means buyers have an awful lot of negotiating power as of right now. So to start off the year, finance conditions, home inspections. If your realtor doesn't want you to protect your financial interests, get yourself a better realtor.
If you're not careful, you're gonna lose me.
And finally, the sales to list price ratio, which measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $96,000, the SLPR would be 96. That fell in December. Toronto's SLPR in November was sitting at 99 and is now sitting at 98 in December. So, despite all of the flood of new buyers expected to come into the market in December, with buyers figuring that the market had bottomed, homes are selling for even more under asking. So, if November's narrative was to be believed, if all these buyers were running into the market, jumping in en masse, understanding that the writing was on the wall, there's only two possible conclusions. Either the realtors don't know how to price homes, or they don't know how to sell them.
Do you guys need some help?
So, in summary, we have the benchmark price up $200, the average price down almost $40,000. We have the median price down $15K, more inventory is sitting on the market, and homes are selling for even more under asking than they were before. And that brings us to the dismal sales numbers, with sales coming in at 3,359 for the month of December, the second slowest December that Toronto has seen in the past 11 years.
It can't be stopped.
Now, as I know many are now backtracking, sales are indeed supposed to slow in December. There's nothing abnormal about that. Who wants to buy a home in December? But what is abnormal is the magnitude of the slowdown that we saw in December of 2024. As mentioned, in December, November's data had apparently indicated that buyers had woken up and would be feeling a sense of urgency to jump into the market, at least according to our resident leading realty company. Yet, if we look at the data, sales from November dropped by 42.83%. The biggest slowdown from November to December that Toronto has seen, again, for the past 11 years. In fact, the last time that we saw this big of a slowdown from November to December was back in December of 2018, when sales slumped by 39.5. Yet, even with that big of a slump, we still did see an uptick in the market. We did see the market take off at least a bit, with the benchmark price sitting at $764K in December of 2018, rising to $819K in December of 2019. So, what this tells me is that we could still see an upsurge in sales in the spring. December's data, while abnormal, isn't enough to tell us anything, in much the same way that November's data, the second worst that Toronto has seen in 11 years, wasn't enough to tell us anything about December sales. With that said, there are some differences between 2025 and 2019 as well, both good and bad. Depending on who you are, where you sit is where you stand. In December of 2018, heading into that new year, we had about 4,000 less active listings than we have right now, and the MOI was sitting at 2.7 compared to today's 3.4. So there was a lot less inventory available heading into that spring market that saw that upsurge in pricing. With that said, it was also much easier to buy back in 2019 as well. Back then, prime had hit its top after rising throughout 2018 at 3.95, whereas now we're sitting at 5.45, but still set to drop further. Then again, who knows with what's coming out of the States, though I suspect that that uncertainty coming out of the United States, as well as current domestic political uncertainty, is probably contributing to uncertainty in the market. I would imagine that that's probably keeping buyers away as well.
I'm turning my back on you!
Fixed rates were definitely much lower back in 2019, with bond yields 100 basis points less than they are today, and a decent 5-year fixed mortgage rate sitting at 3.89 back then, compared to 4.89 right now. So, compared to back then, the cost of borrowing is much higher, though we also didn't have 30-year amortizations back then either.
After all I've done for you.
Well, the 30-year amortization makes it easier to take on more debt, sustain higher debt loads, not actually make anything more affordable, so...
You will not regret this.
Regardless, for December at least, that argument that was being made back in November, that the writing was on the wall, that buyers were about to flood in, just is not being borne out by the data. In fact, buyers have never not flooded in by this amount for the past 11 years. It made sense. In fact, looking a bit closer at the data, looking back to December of 2020, right before the real estate market was about to take off and go to so-called pandemic highs, December only saw an 18% decrease between November and December, compared with today's 11-year high of 43. So, that big flood into the market that we were told was going to happen in December obviously did not happen. Yet, as previous years have shown us, that doesn't mean that it won't. We just don't have enough data to predict anything one way or the other as of this point. We can say that if the market did take off like it did in 21, then we should have seen a much smaller decrease in the amount of sales between November and December, and not an 11-year high. So, what does all of this tell us? Well, the one big conclusion that we can take from this data, from the experience, is do not trust the experts, nor those who bring you said experts. Look at the way the media treated Toronto's apparent jump in sales back in November compared to how they treat December's. Don't buy just because you think it's going to be worse tomorrow. You know, the classic mantra of those who couldn't make it as snake oil salesmen.
I got a lot of big ideas too, but everybody's just so jealous.
Buy because you want the home. Buy because it's affordable. Buy because it's within the budget. As we've talked about before on this channel, if it meets all those criteria, consider doing it. If it doesn't, then don't. With that said, 2024 is behind us. January's data should be particularly interesting, and we'll obviously have updates out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.